Hello, this is Steve Sanangelo from the SRS Rock Report with a new YouTube update. CPM Group drops the ball on the silver mining industry's falling ore grade. Now, this is an important update because I had a Twitter debate between CPM Group and many in the precious metal community. They know who CPM Group, Jeff Christian. There seems to be a lot of disagreement with the CPM Group, but what I try to do is try to debate them on facts. And they put out some information on Twitter that I responded to, and I wanted to do a public video on this to show that I'm really surprised because they put out the CPM Group silver yearbook and the gold yearbook and also the platinum palladium. And it's amazing that they have said this. So I'm going to show why I disagree with them and why the primary silver mining industry's reserves are becoming exhausted. Okay, let's get started. Now, this was as of New Year's Eve. The CPM Group came out this morning. As silver prices rise, the average grade of silver ore falls. At high prices, producers can make lower grade silver ore become profitable. Now, that is true. It has nothing to do with producers running out of silver. Well, that's partially true, and it isn't. So I said, that's interesting, except that the top primary silver mining industry's average yield has continued to decline for decades. And then we can't ignore the fact that it takes energy to extract, transport, process, and refine silver. So the coming energy cliff I keep talking about will equal peak silver. And I do believe we're going to see peak silver this decade, probably in the next several years. But so that was my response. I showed that since 2005, the top 7 primary silver minings, we see their average yield from 13 ounces a ton down to 5.8, 55% decline in 15 years. Then the CPM Group came out which says, your chart proves our point. As the average annual silver price increased, producers were able to mine significantly lower grade ore and increase their profitability. We discussed this thoroughly in video below around 16-minute mark. Well, I disagree because we would know that's the truth if they were not tapping into their reserves. And what I showed, I said, well, we respectfully disagree for obvious reasons. Fresnillo PLC, the largest primary silver mining company in the world, reports falling reserves and ore grades in its annual report. And then there was a major study on the top primary silver miners falling reserves and ore grades. And I'm going to talk about that. So first, falling ore grades isn't a secret. It's been happening for hundreds of years. And this is falling ore grades of gold mines, 1830 to 2010. We see the different countries and the trend is just lower. That's just the way it is. You go through the highest quality ores and then you continue to move lower. And it's the same for silver. This is Australia's average ore grades for various metals. The silver is in the little plus sign here. We could see in 1884, it was 112 ounces a ton, and then it rapidly continued to decline. We could see this is where it's at. In 2008, the average was 3.1 ounce a ton. And so this is just the way it is. And we could see the same thing for gold in the gold line and even copper. That's just the way ore grades continue to decline as we as we have depleted the higher grade sources. And this is also true for the US and Idaho. This is an old chart. I haven't updated it, but we could see from 1937 to 1989, the yields for Idaho have been continuing lower. Even Hecla, they've been producing silver in Idaho at about the 10 ounce per ton. So Idaho's in blue, it just continues to decline. So to say that it's depending on price, this ignores the fact of resource depletion. Now, I want to talk about this report, study. Are the world leading primary silver mines exhausting? And it's out by Marcella Ruberti and Stefani Massari. And it came out in 2018. And it talks about they do a study on the top 12 primary silver mines, and they show what's happening to reserves and ore grades. So again, I wanted to first show you this. This is, I took the top 7 primary silver mining companies and mines average yield, And this is the yield is the same thing as the ore grade, but you lose some of the silver in the ore grade when you actually process the ore. And this is, we see in 2005, it was 13 ounces a ton. And in 2020, it was 5.8. That's a significant decline in the average yield. And it's not just the yield. It's not just going to lower grades because you have a higher price. If we look at Fresnillo's 2008 annual report, this is their Fresnillo mine. They've got several mines, but this is their Fresnillo mine. They had, this was their proven and probable 405 gram per ton. That was their average reserve, and they had 372 million ounces of reserves. Let's look at 2020. And we could see this is Fresnillo's. They don't even have proven, they just have probable. We have 265 grams per ton and 131 million ounces. So we could see it's not just they're going into lower quality, they're just running out of the reserve. And we could see it's fallen. Their reserve has fallen by 200 million ounces more. And their average grade is also declined from over 400 down to 265. Now, in that study, that scientific paper, this is the silver production and processed ore. This is the top. These are the mines that they were using in the study, the top 12 mines. And we see the processed ore here, and then or production and the processed ore. So we can see that the processed ore continues to increase as we add more mines. And then if we look at the primary silver reserves, we have proven and probable. And this study took, let's just look at the proven. The proven in 2008 hit a high of 75.7 million ounces, and it declined to 32 million ounces. And even the probable. But what's interesting, the proved as a percentage of proven probable has declined from 78% down to about 39%. And if we look at the average ore grade of the silver reserves and resources in these top 12 primary silver mines and mining companies, we could see that they are trending lower. And so the reserves in blue have been falling steadily. And right here, it shows in 2016, 272 grams per ton in reserves. Now, why is that interesting? Well, if you look at 2016, that's 272 gram per ton in reserves. And if we apply a loss factor of about 8%, these mining companies do not, when they process the ore, they do not get 100%. They get about 92 between high 80s, 93, 94. And I estimate they lose about 8%. So if we take 8%, that would mean the yield would be 250 grams per ton. So what is 750 gram per ton yield in 2016 reserves? That equals 7.8 ounces per ton. Well, if we look at my chart in 2016, what does that show? 7.8 ounces per ton. And so that's basically they're producing their reserves. They're not high grading or low grading. They're producing what they have. And the reason why we see the bump up here was because in 2014 and 15, the Tahoe Mining Company added its Escobal high grade mine, which was 20 ounces per ton. And that's what boosted it. But then it continued to decline afterwards. So what is also interesting is not only are the ore grades falling, as well as the reserves. This is the actual mine life, proven and probable, and measured and inferred. If we go by the reserves, which are proven and probable, we can see back in 2007 in these 12 companies, it was 13-year mine life. And it continues to decline, and now it's at 6-year mine life in the reserves. Now they are proving up more reserves, and I'm going to be doing updates for at the SRSroccoReport for the subscribers, gold and silver subscribers. But we could just see that this is not high grading. This is just the reserves are being depleted. Now, The report did an extensive references. We can see there was over 34 references. They went into a lot of the companies you can see here, but they did reference my work from the Silver Chart Report 2015 from the SRSrock Report is the Silver Chart Report. It's this report right here. I put it out in 2015. I may be updating it, but they did an excellent job showing that reserves in the world, whether it's copper, whether it's gold, whether it's silver or other mines, they're just depleting. And so even though we are finding some new higher grade ores, there are not many of them. And so it just takes a lot more energy to produce these metals. So we disagree with the CPM group. I think they dropped the ball on this. Maybe I imagine if they see this YouTube video, they're going to explain, but while companies will high grade a little bit, the overall trend as years go by are the higher ore grade mines are depleting, and we are making it up with lower ore grade mines. So I hope you enjoyed this information. I was really surprised that the CPM group mentioned, they talk about this. It seemed to be a little deceiving to me. That's why I put out this video. And please share this. Either I'm going to post it on Twitter, or you can send the link, the YouTube link, to other people, other investors in the precious metal industry. And I thank you. I hope you all have a good, happy New Year.